Hello, how are you? How are you doing? Can you hear me? I assume you can. I will wait for everyone to join, and then we're gonna start uh, the topics. We're gonna do some analysis from this week, check out what happened this week, and then also we will probably talk a little bit more about SMT, which we discussed actually on Monday. So the smart money tool or smart money technique. Doesn't matter actually what you call it, but it's SMT, and it's technically divergence confirmation tool. You can use with US dollar pairs, so it can be really helpful, I think, especially let's say if you are looking at a reversal, that's when you would basically look at the SMT. So right, I think first we can I believe it would be kind of nice if we analyze the market a little bit, what happened this week, especially on gold, because actually there are quite a few good movements on gold. There was even this move in the bottom, which I actually missed. But obviously in hindsight, I can tell you that it was a pretty nice daily cycle reversal trade that was unfolding. And also another thing that was kind of interesting actually, that this particular trade, it was something I was also discussing with Leonardo, but this particular trade was also aligning with let me show you what. So it was also aligning with a higher time frame. I would say optimal trade entry. So probably if you go to the daily time frame or maybe the weekly. So technically you can use the optimal trade entry on any time frame as long as you have a swing low and a swing high. So if you take a closer look, like this is a swing low here, this is a swing high, and you can technically use that one. And it was pretty much this one, so this level. I mean, this is the correct way, so you cannot use it better than this. So this level was aligning. Let me show you. It was aligning with this consolidation, right? There is sort of like the supply demand area. So that level was what gave the main reversals. So it gave the reaction, but it's obviously not enough to use the fibs. It's something I discussed and was telling for a long time actually, from the beginning. So the fib alone is like not a confirmation you would use. So that's when like other stuff and other confirmations would be coming into play. Like let's say if you implement the daily cycle, and I can show you exactly that at this level, at the exact same time that we want to look at, this is where the daily cycle reversal was unfolding at this level. And it's also kind of interesting that obviously on the higher time frame, as I showed you, like we had technically this this optimal trade entry level right there, so on the higher time frame too. So it's pretty interesting. But I can go right away to the lower time frame and probably show you what happened here. I think it was on the 5 minutes probably. So it was pretty much the lower time frame confirmation for the reversal daily cycle. So obviously switch your chart to the New York, and you will see that this is the range. This is the range you want to look at. And obviously it's pretty clear that we know exactly that if the higher time frame, excuse me, not the higher time frame, if the Asia range is not swept on the top, you could view that as a liquidity. So let's say, the market drops down heavily in London, and, it's pretty much the same thing that happened here. So the market was dropping down heavily in London, and here it made the impulsive, and at the last part where it made the impulsive, it obviously made this type of pattern on the lower time frame. And we're gonna look at that. We're gonna take a closer look on the lower time frame. But the main idea is if this happens, so the high of the Asia range is not swept, then you would look at that as pretty much as a magnet. So it's technically the liquidity for you, and this will be pulling in the price, just a matter of time. And you can see here on the left side, it's already clearing the liquidity. So I can go to the 5 minute. Probably in the 5 minutes or the 1 minute, we had that particular entry. You know what? I'm gonna go on the 1 minute and show you what happened there. It's probably the best on the 1 minute. So this is, and especially if you would been looking at, let's say, on the daily at this level, then it will be pretty easy to determine that this is where the trend will reverse after you see the reaction at this level, which I showed you on higher time frame. Probably also if you use the range, you might see like four standard deviations. You can check that out, and you know exactly like 4 would be really the maximum you would be using. So that's 3, and 4 is at that level. So bunch of confluences that happened here. So it's the standard deviation, and it's right there. So also, as I said, the 4 is always the maximum. So it will pretty much never be more than 4. If it's more than 4, it's unlikely. So it's something that's something that's not too likely to happen. But 4 is like really the maximum you wanna be looking at. So again, you have the 4 standard deviation, and you also got this light blue optimal trade entry level, which I was showing on the higher time frame. And right here, it's quite obvious. The market comes down, goes back up. It also kind of breaks like this structure right there. It creates this order block. We have the fair value gap, and you can take this optimal trade entry here. So everything from that point would be super simplified. See that? So that's where it exactly comes below, and it never goes below the 70. So that's why I'm not using anything below the 70. It just arrives to the 62. It little bit taps below the 7 to the 70, just a small tap, but it immediately reverses, and it's mostly respecting the 62 and not the 70. So you can see most of these candles was respecting the 62. So that's the level you want to look at. So so when you take the optimal trade entry, always taking the 62, never something below. So it will just make you a pain. Also we had these 2 down close candles, that's the order block, and technically this was what happened. And we can also like look at the kill zone. If you check the kill zone, it's right there. So if you look at the time, and guys, also something I wanted to say about the kill zone. It's a very small thing, but now I'm mostly thinking about using 9 o'clock to 9:30 instead of 8 o'clock to 8:30, because we have daylight savings time. So it's 1 hour ahead at the moment. So instead of the 8 o'clock 8:30, I'm testing out. I'm mostly looking at the 9 o'clock 9:30 at the moment. So, we are 1 hour ahead right now. So, if you also look at it at this point, see, so we no longer have the 8 o'clock, right? So look at the 8 o'clock. So this is 8 o'clock there. It comes down 8:30, nothing happens. But, now we are 1 hour ahead. So from 8 o'clock, 8:30, we moved to 9 o'clock and 9:30. So that's what you will notice here. So that's the 9 o'clock. See that? And technically between the 9:30 time, so 9:30 and the 9 o'clock, right there. See, so that's where the real entry happens. So it's a very small thing, but you might want to keep this in mind. So now we move 1 hour ahead. So just a small thing, but it will be very useful, so you will not miss any trades. And you will not be trying to catch trades ahead, like an hour ahead. So you might want to keep that in mind. And on gold, as I say every single time, you got to use 35 pips. Like I don't really care like where's the fib level or where's the order block. On gold, every single time is 35. It's like something you must have. So only 35, not less, not more. Just keep the 35 and at least 1 to 3. So at least 1 to 3, 1 shot, 1 kill, or you can even get, if you are really going to the technical details, you can even target the high of the Asia range. So that would be the way you would be trading the reversal. So, as I said, most of the time, you got to target the reversal trade, the high. But, it's like already 1 to 10. So, you might close partial here and maybe let the rest run. And it probably happens the same day, right? So almost the same day. So, the goal, also like the goal is to close the trade before the next Asia session starts. So, you want to close it before the 7 o'clock New York time, see? So let's say you would close it here. So, let's suppose you have the idea of having this high taken, but you take the trade, you let it run, and it's eventually 7 o'clock, gotta close the trade. And the reason why you close the trade, because many times the next day it might be going lower, and only after like 2-3 days it takes out this high. So that's why always at 7 o'clock before the next Asia range is starting, gotta close the trade. So let's say this is like a 1 to 7, 1 to 8, something like that. So yeah, this is what I wanted to explain. And just a very small detail, like with the time, right? So it's a small detail, but I think it will be something you want to look at. So instead of the 8 o'clock, 8:30, see that? So 8 o'clock, it does not really offer anything. Now it's 9 o'clock. See that? 9:30. See, and also this pullback, see this one, look at the time, 9:30 right there, before it started moving up, right? So that's what we were discussing before with the 8 o'clock, 8:30. So, we 1 hour ahead right now. So 9:30, it's right there. So yeah, that was it. I just wanted to show you guys this because it was kind of interesting for me how well everything was aligning, especially like looking at this on the higher time frame. I'm not really using stuff like this on the higher time frame, to be honest, but I was just looking at it and it's kind of interesting how well it gave the reaction. So on the weekly you can check it out. So we have this swing low, if you have the impulse move, we have this swing high, and it comes back 62, and it was perfect reaction. So right there, see this line, so it was perfect reaction. So higher time frame buyers and lower time frame daily cycle execution. So it's kind of simple what happened, to be honest. But if anybody got any questions about this, especially about the time that we moved ahead right now, just let me guys know. All right, I guess no questions. So we can, I think, probably also take a look at Euro USD quickly. So we also had this one, which was kind of interesting. So, all right, no questions. Sounds good. Now, if everything is clear, then it sounds good. Just, you know, I never want, if something would be like unclear for someone, because I know like some people are like shy to ask. So, you know, just anything would be like questionable, or, you know, you want me to repeat, I'm gonna repeat again. So this is also something that was kind of interesting. This was, again, we can move this a little bit down. So, you know, I wasn't really trading this day, to be honest, because the day this happened, so the day this Euro USD happened, we had also, I think it was same day, right? So 29. No, it was the day before. I don't know. So for some reason I didn't take this. So do not ask me why I did not take it. I remember as I was looking at gold or something. I was even chatting with someone in the Discord. So, you know, I missed it. But I've seen a couple of guys had this analysis, and, you know, it was pretty much a good idea. Even though, you know, end of the day it was bullish. You know, it is what it is. But, you know, it did offer a trade. So it did offer, I don't know, like 2% or something. So see that. So if you place the stop loss to the 100, it's like a 2%. Obviously, you know, I always say like 1 to 3. So who knows? This might be like a break-even trade, but you know, like the ID was kind of playing out, to be honest. So, but you know, it's like the ID was pretty much, you know, like this was the range. Obviously, everyone was looking at this like the liquidity, so, you know, it's not swept. And we had this high, it was swept by 20 pips. And, you know, obviously at this point you want to look at the reversal. So you know, it went down, came back, and that's what you want to take as the New York key zone is opening. So as soon as the key zone opens, that's when, you know, you can pull out your fib and try to take the trade. So it was a 1 to 2, not the biggest, obviously. So some reason it was still going up, but, you know, probably just clear more liquidity because now it's dropping. But you know, it's you know, just a good example that how you could try to catch this trade even though it did not clear the range the same day. It's like still not a bad example. So, you know, you just pull the fib from the high to the low, it comes back, and, you know, you can already, I mean, 1 to 2, it's not bad, to be honest. But obviously if you want to one shot, one kill and hold always 1 to 3, then you might get stopped out. So, you know, this was kind of interesting week. Probably it was kind of chopping around because I haven't seen too many things. Maybe it was the NFP, but, you know, let's see what next week brings us. So, you know, like last week, we also had like really good trades. So this one, so we had a bunch of good trades previously, but, you know, this week was kind of slow, probably of the NFP, but next week hopefully it's gonna get better. The range hour. So the range hour of London and New York. So it's actually so the times is actually, so London is 1 o'clock to 5 o'clock. So that's what we want to look at. And New York is 7 o'clock to 11 o'clock. So that's what you want to look at. So 1 o'clock, 5 o'clock, and 7 o'clock to 11 o'clock. So you know, these things, if you go through the lessons and take a look at the lessons, then, you know, it will give a pretty good explanation why we use this. But, you know, obviously, if you have any question, just let me know. So, all right, guys. So, this is what I just wanted to check out. Because, it wasn't really an interesting week, to be honest. Like, I seen a couple of good trades like here this morning, but to be honest, this week I didn't really care about what's going on in the market. But I think probably we could still discuss S&P, which was technically the divergence you wanna use for the reversal, right? So S&P would be the divergence confirmation tool for you. So if you guys still wanna discuss that and probably have questions about it, just let me know, and we can discuss that. What do you guys think? Should we go over S&P again, or probably talk about something else? I guess then S&P, right? So I think we can check out a couple of examples. So okay, S&P then. If you want to backtest also the S&P, like one thing you want to look at, so this thing is mostly happening when you have reversals, right? So, let's say you would be bringing up the DXY, so that's the one I like to use it the most, but you can also use it with other US dollar pairs. But the thing you have to keep in mind that this thing, the S&P is mostly working on US dollar pairs. So let's say if you would be using it on something else, then it would obviously not work. If you are using DXY, if you are using like a different pair, like like a random example, like Australian dollar, CHF, then you would like to look at a Swiss franc currency pair. So that would be, let's say, what do we got? I never trade this, to be honest. So maybe GBP, Swiss franc. So maybe I can show you one example of how this thing works. So, okay, let's take off this one. So, obviously these two are positively correlated, right? So you can see that when the Australian dollar CHF is moving to the upside, the other one would be also moving to the upside. So, then obviously you have to use it a little bit differently. So, then the way you would use it is, a little bit different from the DXY. So, if you guys remember how we use it on DXY, we technically had this one. So, let's say DXY is bullish, then he was looking at the opposite direction on Euro USD or whatever US dollar currency pair you want to look at. At this one, we were looking at, let's say DXY is still going higher, but Euro USD is not going lower, it's going there. So it's not creating another lower low. So that would be the correlation. But if this is something you haven't watched yet, or missed the last community call, then just make sure to watch my last recording I uploaded, because there I explain everything step by step. So it would not be something alien to you. So just make sure to look at the community call we had, and it's uploaded in the Telegram, and then it will make perfect sense. So now if you feel a little bit lost or do not understand something, make sure to watch the last community call we had. So it will explain everything. But now with the example, so for those who was watching the last community call and want to see the one where we do not have the negatively correlated pairs, we have positively correlated, you want to look at it, because last time I haven't showed you, to be honest, I think any example with the negative, with the positively correlated, I only showed the DXY, which is negative. I think that's the easiest one. So when it's positive, So it's both of them are moving in the same direction. You want to look at it kind of this way. So let's say one of the pairs you want to find the setup is moving like that. So let's say you want to look at a reversal, but the other pair is still moving to the downside like that. But like in time, in terms of the time and price, like this would be like this exact same time and price. So let's say both of them are 8 o'clock or 9 o'clock, whatever you want to look at. And let's say one of the pairs is still creating another lower low, lower highs, lower lows. So one of them would be still creating another lower low, but the other one does not create another lower low. So, they will be naturally doing the same thing, right? So it's not going there. It's rather stopping there. See that? Stopping there, then this would give you a sign and a possibility that the blue currency pair, marked with the blue line, would be moving now to the upside. So it will be moving to the upside instead of just doing something like this. So let me show you. So instead of just doing something like that. See? So if it's not creating another lower low, it just stops right there. You can immediately look for the reversal. And I think I can show you something here. So again, both of them at the moment are moving into the same direction. But right here you will see the example with the positively correlated. So here you can see that the blue line, let's change the color. So the blue line is still moving up, see? So it's still creating the higher highs, this point, see that, and the higher lows right there. And it's still creating a higher high here. But if you check the other one with the candlesticks, you can see that here we created a high, but at this point, we did not create another higher high. See that? So it stopped at that point. So you know that both of them are positively correlated, right? So if one moves down or it moves up, it's following the same direction. But if you have something like this at a reversal area, then that could confirm you that we would be moving to the downside instead of moving to the upside as this one was previously doing, right? So that would be the SMT in this case. And you can find like optimal trade entry, order block, supply demand area, or anything right here. Like I can even show you right now. We have actually this zone. See that? So as the market is arriving to this sort of order block, and you check the S&P, you would find out that this particular order block is a valid order block. So this one would be a high probability to take a short, because if you check the S&P and you check the correlation with do not forget we basically looking at the same pairs, right? So this is CHF and this one too, and it's positively correlated, so that means both of them are moving in the same direction. But at this point, you check the structural points, you see that one of them is still bullish, right? So it just created a higher high. But the other one, which you want to take a potential sell from this order block, is not creating any more higher highs and higher lows. It rather stops at that point. See that? So this would be your SMT divergence right there. And this could confirm you that, all right, this trade could be taken with a safe trade. So this would be a safer trade for you to execute. So right there. See, so if I don't know, like let's say if you are the person who's trading with these order blocks or like anything, like this this SMT technique, a lot of times it would tell you the actual trend direction change. See, so perfect example right there. So, once you find the SMT, you would not have any doubts or you would not have any questions in if this would be moving down. So, once you see that, you can have the confidence to take this trade. I can even take this off and even show you that this was actually, again, like, pretty much the same thing. See, no break of structure entry, just an impulsive move, pullback, no break of structure, nothing. See that? So, right there. So no break of structure, just the impulsive move. So that's how this trade would be executed right there. So, I think this was probably a good example, but let's look at a couple of other ones. So, you guys can take a look at as many examples as possible. So, as many examples as you see, the better you will become. So, your eyes will get used to it. Let's see what we got. So, mostly we have to look at the reversals. So these things happen at the reversals. And, obviously I want to show you guys the good examples, so it will make good sense. I actually seen one here. So one here, it just happened, but probably I can find you a better one. But, maybe this one's good. So let me show you. So technically we have like a bunch of things here too. Like we have let me take this off for a moment. So, even without the SMT, there are a bunch of things. Like, let me show you what do we have at the moment. First, we have these equal lows on the bottom. We have these buy stops, technically, it's taken. We have this fair value gap right there. So, you can see the fair value gap. We also have this order block. And, obviously, we have the optimal trade entry right there. So, just alone, if this setup is not enough for you to take the short and to take this trade from, the equal lows, we have the sweep, it's almost like, also like, what's this? We have, who knows what's this? We have the accumulation, we have the manipulation, and, obviously distribution after that. So, sort of, we also have the accumulation, smart money reversal. See that? And, it's also, you can always smart money reversal because, it comes down impulsively, makes a pullback and drops again. This would be like the distribution. But, if this is not enough for you, like you could also bring in the SMT, right? So, even like this would be still not enough for you. See, like take this trade. That's the time when, you would pull on a positively or a negatively correlated pair matched with the same currency, right? So Australian dollar, GBP, and both of them are matched with the Swiss franc. So that's when you bring this and you see that here what we had was still going up, right? So this still created technically higher high or maybe equal highs, right? So see, created still a higher high. It's a little bit higher. But on the other pair, which you have the setup, is moving to the downside. See that? This one's going higher, but this one's going lower. You know, what this would be telling you, so what does this mean for you? So what this would be telling you, that the algorithm for Australian dollar Swiss franc is creating higher prices. So once this is not moving higher, right? So it's not creating equal highs, or it's not creating another higher high. It's only just, you know, it's clearly going lower, right? But this one's still going higher. So what that means for you is that the algorithm that moves the price, it wants to see lower prices because of this, because of the correlation they have. So the divergence they create. So this would be a clear sign for you that all right, the algorithm wants to push Australian dollar, Swiss franc lower to lower prices, even though that this one still created a higher price. So this one, so Australian dollar CHF wants to find lower prices. You know, same thing happens. A little bit of consolidation still gives another SMT here. So check this one. So here we have still the price moving to the upside, right? See, still higher high. But this one, see that? It created another. It did not create a higher high. See that? So see the difference. So this would be telling you the correlation, and this would be telling you that, all right, see, not the optimal trade entry, you safely take the trade. And you do not have any doubts, or you do not have any questions that this would be going lower and make lower prices. You know, takes out the equal lows right there, even drops lower, almost a 1 to 7, 1 to 8. So yeah, this is the way you have to use it. So it will be telling you, you know, this one, I mean, it's pretty clear, but if anybody has still any questions about this, see that, just let me know. So, you know, I can explain it again. So that's the difference. So, you know, we already discussed that both of these pairs are moving the same direction, but, you know, look at the highs and you see there. The algorithm wants to see lower prices in Australian dollar CHF. All right. So what I mean by perfect pair, it can be like anything. Like if you are looking at CHF pairs, like it's not obviously it's not Australian dollar, US dollar, it's Australian dollar, Swiss franc. Then obviously you want to be aligning it with another Swiss franc pair and not like a Dixie, DXY, whatever. So you want to find those pairs. SMT for Euro USD, it's is DXY or any other US dollar correlated pair. So, you know, obviously, like let's say if you would be looking at Euro USD and GBP USD, then obviously you try to look at the same way as we just did on these two pairs. But if it's Euro USD and DXY, then obviously you have to do the opposite. But, you know, I won't go into explaining that right now because you know I already explained that in another in a team course, so I uploaded that. So the Euro USD version with the DXY is uploaded in the mentorship group. But you know, make sure to also look at the old videos and look at basically everything step by step. So, you know, if you wanna learn everything step by step and be on the same page, so the best, you know, is to look at all the videos we had. All right, guys. So I hope this session was helpful. And have a good weekend, guys. And next week we will talk again on Monday. So have a good weekend, guys. And if anybody has any questions, just let me know. I'm here to help you. And I will be here to help you with anything you have to ask. Have a good weekend, guys. Bye bye.